Hi everybody, this is Alex Deploy from Expert Forex. Welcome to today's discussion on the grid trading system. This is an introduction, and being on a video, we are covering quite complicated calculations. The advantage of having it on video is that it allows you to look back, stop the video, repeat certain sections until you have a good feel of what's involved in trading the grid system. So let's jump straight into it and look at what the grid system is all about. And there are 5 steps to trading the grid system. Firstly, the grid system requires you, as step 1, to establish a grid size that you're going to be using for your trading, and in this example we're going to use 200 pips as a grid size. So the gaps between the grid lines is going to be 200 pips. So once you've established that, we'll go into how you establish that in later videos. You then start your grid trading system by buying and selling the same currency at the same time. Therefore, we don't know what direction the market's going to be moving, so we buy and sell at the same time. The third step is the price then moves by your grid size. It moves to the next level. So that's your start level. So your next level would be, or level 1, start level there, and level 1 there. There's nothing to do, as the price will get there by itself. Once it has reached there, you go into 2.4, which is you enter a buy and a sell at that level again. Then you cash in your positive transaction. So the buy from your initial transactions will be positive, so you cash that buy in, you just leave the transaction that's negative. Then continue until all the transactions that you have entered into are positive or breaking even at a grid level. Once that happens, you cash it all in and you start all over again. Alright, we're going to it'll start making sense once we go through a couple of examples, but that in essential is the recipe to trade the grid system. Just some terminology that we use. The grid gaps are the differences between the grid lines that you see here. So in this example, we've used 200 pips as our grid gap, and we tend to draw lines on the charts just for visual clarification. So the trading grid is in fact all these lines that are drawn on the chart. Just to clarify, we only need charts to establish our grids and establish the currencies that we're going to be trading with. After that, trading charts are not needed, as we use pending orders and the broker's trading platform to trade the grid system. Okay, so let's just have a quick overview of the grid system. It can be used for any investment that is random and range bound. So it can be used for indexes, for shares, for Forex, for any investment that is random and range bound. We trade with no stops. As you've noticed, we don't put any stops in. That is because we are either fully hedged or partially hedged throughout the process. There's no reliance on direction, don't care which direction the price is moving, and we make use of the natural wave movements of the market. It is mainly an investment system, not really a trading system. Because of the size of the grid, sometimes the transactions can take weeks to actually happen. It requires a paradigm shift. If you are a trader at the moment and used to trading concept, we're basically using investment concepts when using the grid system. Does not require charts, as mentioned before. The charts are only required really to establish your initial trading instrument. Also, the charts are only used to establish the reasonability of the trading gaps. It is highly mechanical with very low supervision and can be automated into, for instance, an EA quite easily. Just overview again, the strength of the system: no stops, no directional bias, mechanical and very low supervision. The weaknesses of the system is that it appears complex and illogical in the beginning. If you've never traded it before, it just seems totally illogical. It requires a paradigm shift, especially because it breaks all the normal trading rules that we have. For instance, one of the rules is let your winners run and cash in your losers as quickly as possible. This does the opposite. It actually cashes in the winners quicker than the losers. So it's got a few concepts that traders don't really like. It can incur drawdowns if traded in a or used in a strongly trending market with inappropriate currencies and inappropriate grid sizes. It requires considerable patience. As I say, sometimes transactions take more than a week to happen. Just a reminder, there are 5 steps to trading the grid system. The first one is establish a grid. Second one is to buy and sell at your start level. Third one is actually just the price movement that occurs then. And the fourth one is to enter, buy and sell it at the next grid level and cash in the positive and let the negative ride. And then to continue that process until the transactions are positive or breaking even at a grid level. Once that happens, you can cash in and start again. Right, for more information on grid trading, you can visit these sites. There are some articles, videos, and other interesting information about grid trading. Or you can contact info@expertforex.com. Okay, so let's have a look at some money-making moves using the grid system. The first one is the 100% retracement move, and that results in a profit. If using a 200 pip grid, that would result in a 200 pip profit. And how this works is you would start with a buy and sell at the start. It would go up to your next level, and there you would enter a buy and a sell. And you would cash in your positive transaction and you would leave the negative transaction there. It would then move back to your start level. The price will then move back to your start level and you will cash in on the sell going down. Your buy would be negative over there, but your sell that was previously negative will go level. Your sell that was previously negative will break even because the price is returned to that price level. So that would, once that has happened, you will make a 200 per profit, and we'll just quickly go through that very carefully. In the beginning, you buy and sell, and that's a zero situation. The price then moves to your first level, and at that level you enter a new buy and a sell, so they are neutral. You cash in the buy, the first buy, and your sell will have then gone 200 pips negative. So you've got one open transaction of minus 200. You've cashed in one of the transactions and you then have 2 open transactions that have no result at that time. It then moves down to your back to your starting position, and at that point your first buy has been cashed in. Your first sell then becomes neutral because the price has moved back to the same price level, and the buy that you had at level 1 has now become negative 200, but the sell you've been able to cash in the sell at that point. At that point, if you add that all together, you've got a positive, a cash in there and a cash in there. You're carrying one negative and one break even. If you add them together, it's a overall position of plus 200. The advantage of video is that you can go through these calculations, go backwards if this doesn't make sense the first time around, and just make sure that it does make sense before you move on. And here's a practical example of how the price movement would happen. You would enter at a particular price level. It would go up, hit your price level. Eventually, it comes back to your entry level, and this is an example of 100% retracement. Now the next money-making move is the 50% retracement, and what happens with the 50% retracement is that you enter buy and sell at the start. It goes up, and in this example again, remember we're using 200 pip grids. It then goes to the next level where you enter a buy and a sell and you cash in the positive and you let the negative ride. It then goes up again and you do exactly the same. You enter a buy and a sell, you cash the positive and you leave the negative open transactions there. Under this movement, the assumption is that it would then move back to the first level, not your start level, but the first level. And what would happen then is that you would cash that leg in. You would have a buy transaction here that is negative, and you would have a sell transaction here that is negative, and your sell transaction here would be breaking even. So you'd have three cash-ins, 1, 2, 3, and you'd have two negative transaction, and that would result in a positive gain of 200 pips. So let's go through that very carefully. Let's go to the start. Again, you're breaking even. Then you move to the second level, which is the same as the previous example. There you cash in your buy. Your sell is then an open transaction, which is negative 200, and you then enter two new transactions, which is a buy and a sell, which are price. Then moves to the next level, and you basically do the same thing again. You enter a buy and a sell, and that's neutral. You cash in the buy that has gone positive, and there is a sell transaction, which is an open transaction, which is negative 200. Remember, the sell from your first transaction will be minus 400, which is an open transaction. So at that point, you're 200 pips down. Under this move, the price would move back to your first level, and you would then cash in the sell transaction. And let's have a look at the calculations for that move. Your first buy would have been cashed in, your second buy would have been cashed in, and your sell would be cashed in, as we've seen previously. We're talking about cashing in that one, and cashing in that move. You then have a buy negative here, a sell negative there, and a sell neutral there, which is reflected here. You have a sell negative, your first sell. You have a buy negative, which is the last buy, and your middle sell is now breaking even in an open transaction. However, if you add them all together, you are now plus 200, and you would cash in the whole lot and start again according to the grid formula. And here again is a real life situation showing you the price movement going from one level to the next level to the next level to the next level, and you would cash in those three legs, and you at that point there you would have a negative buy there and a negative sell there, but your cash-ins would outweigh the negative transactions, and you'd be in profit. We've now covered the two profit-making moves. We're now going to look at the break-even move. Now, the break-even move assumes that the price moves three levels away from your start. So it goes 1, 2, 3 levels away, and then does a retracement after the third level to the second level, in fact. So what you would have here is you'd have a cash in of 1, 2, 3, 4. So you have 4 cash ins. 4 times 200 is 800 pips. But you would have a buy that's open here that's negative at 200. You would have a sell here that's open at negative 200, and your sell here, which is now 2 levels away from where the price is now, would be negative 400. And if you add the open transactions up, that works out to 800. If you add up the cash ins, that works out to 800, and you have your break even situation. Okay, and there's the calculation if you want to do the calculations that I've just shown you, and there they are. Okay, so we've got 2 profit formations and 1 break even formation, and those are the tools that we'll use for our grid trading. We're going to now show you an example where 3,200 pips were generated within I think 41 trading days, which is about 2 months, in our actual subscription trading service, which was run a while ago. This service is no longer available. We stopped it due to the trending nature of the market, and also due to some changes that were made in the American market regarding hedging and FIFO rules. Those have now been overcome subsequently by using 2 trading accounts. So you use one account for buys and one account for sells, and the FIFO rule is no problem because we do cash in the first transaction at all times. So just a reminder, your first money making formation is the 100% retracement, and the second money making formation is the 50% retracement. Okay, so we can make money using any of these combinations. You can So there's a lot of combinations which give you profitable opportunities. And here's an example of where we used a 250 pip gap, and there are the grid lines traded on this currency. This was a subscription transaction, and this shows the formation. 18 times 250, we had therefore a nice gross gain of 3,200 pips. And here you can see the application of the profit making formations. We didn't even encounter a break-even formation in this particular instance. Now, risk control, this is most probably the most important slide, because what is going around in all people's minds is, what if the price just trends and trends and trends and never makes any of these retracements, and we need 100% retracement to make money, we need a 50% retracement to make money, and then we need a 33% retracement to break even, and then after that we start making losses. So at Expert Forex, we recommend very strongly that you never trade past the fourth level. And using the previous example, if the price had to reach the fourth level, which is 1,000 pips from your start, you would your losses would be, your start level would be 1,000. Your first level loss would be 700, your second level loss would be 500, your third level loss would be 250, and your fourth level, because you've just reached there, will have no loss. But if you add them all together, that's a minus of 2,500 pips. However, along the way you will have cashed in. So you will have cashed in 1 leg, 2 legs, 3 legs, 4 legs, cash in, and minus 2,500 plus 1,000 gives you minus 1,500. So at that point, what we're saying is, at that point, just treat that as a loss and start again, or refrain from trading until you are sure that the currency is no longer trending. So that is the risk control method that we use. And if you trade the grid trading system over a long period of time, sure, you will be stopped out a number of times, but you will also cash in a lot more than you'll get stopped out. Remember, whenever there's a trend, there's always a consolidation before the trend, then there's a trend, and then there's a consolidation very often after the trend. So a lot of people make enough money during those two consolidations to make up for the losses that they've made during a trend. So the runaway trends are not a problem for the grid system. We just take the loss on the nose. It's not a big loss. It's only 6 cash-ins. That's only 6 cash-ins. And you just have to look at our example previously. Here's an example of a 1,000 pip trend. Look at that. That's 1, 2, 3. That's 700. But if you go beyond the lines, that's another 200, and there's another 50. So there's a 1,000 pip trend that was encountered there, and there was never danger of a problem. It's because of the cash in at that point, which helped us there. But you can see the system can actually take trends of well over 1,000. You can track trends almost probably up to 1,500 or 400 rather, and before you'll actually cash in negatively. So risk management is very important. Study this. This is our recommendation, that you never go past level 4, whatever you're doing. And this looks like a lot, but remember, if you're trading a micro account, that is $150, and that's $25 a shot. So if you're trading micro lots, this is not a train smash or a high risk trading method. Right, from me, Alex Deploy, thank you very much for watching this video. And if you do have any questions, please contact info@expertforex.com, and we're happy to answer any questions. Otherwise, go to hedgedforex.com or expertforex.com for more information. So from me, Alex Deploy, cheerio.